Hey everybody, this is Ty over here at Credit Suite. I'm really excited you can join us today. So today we are going to be talking about building business credit. Most importantly, we're actually going to be talking about how to avoid the issues that people have when building business credit. Now, for those of you that are not familiar with me, I speak a lot and talk a lot and help a lot of people build their corporate credit. And along the way of helping, I don't know, we've helped probably well over 10,000 people build corporate credit at this point. We see a lot of people run into the exact same obstacles, the same five biggest mistakes that keep them in their tracks instead of actually being able to progress and have success with building corporate credit. So today we're going to be decoding these. I'm going to teach you the things to avoid, the mistakes to avoid when building business credit so you can actually come in and have success instead of running into any issues along the way. Now, if you want to follow us along with a free guide, we've got a great free guide on the 4 steps of building business credit available on our website at creditsuite.com/EIN. So feel free to check out that site to grab a free guide anytime during the presentation. And again, if you'd like to get in touch with us, feel free to do the same. 877-600-2487, info@creditsuite.com. We can definitely talk to you more about how you could take years of business credit building and condense it down into only months. So when we talk about business credit now, just to kind of give you those people a refresher that maybe aren't even familiar with what we're talking about, with corporate credit, we're ultimately talking about credit that's in a business's name. This credit is linked to the business's EIN. It is not linked to the actual business owner's social security number. Okay, now once an initial credit profile and score is established for a business, well, you can then use that to qualify for credit and financing. And there's really two of the main benefits that you want to focus on when building business credit. In doing so, you can get very high limit revolving credit cards in your business name that are not attached to you personally. And also, it's the key to getting business loans. Your credit quality determines whether you'll get approved or denied for business loans. It also determines the rate and terms that you'll pay, even the amount of money that you'll be approved for. So business credit can be used to qualify for credit and financing with no personal credit check or guarantee, including vendor credit, which is the initial credit that you use to start building business credit, store credit cards. So this includes, Visa card, this includes, Amazon and Walmart and almost every major retail store, from Dell to Sears to Sprint to BP to Chevron to Sunoco, and everywhere in between offers corporate credit cards. So you can get high limit credit cards in almost all major retail locations. Fleet credit is part of what business credit is. All of this, again, can be obtained without a personal credit check or personal guarantee. Fleet credit really has to do with a lot of auto vehicle credit, where you can get financing to put tires on your vehicles and oil changes and any kind of maintenance. And we've even had customers that report that they use their fleet credit cards to physically take cash out on as well. You can also qualify for cash credit, which are Visa cards, MasterCards, American Express cards that you can use pretty much anywhere, all without a personal guarantee and without a personal credit check. You can also qualify for auto vehicle financing. So you can actually walk into a dealership, walk out with a vehicle with no personal credit check, with no personal guarantee or personal liability for any of this type of credit and financing I've listed here. And again, you can't get as many loans as you can without as credit when it comes to a personal guarantee, but it also makes it where you can get more money in financing and get better terms as well. Now, business credit provides a lot of unique benefits, including that credit limits on business credit accounts are substantially higher than what you've ever seen before in the consumer world. You may never have seen a $40,000 credit card in the consumer world, but in the business world, you're getting those kind of limit accounts within 2 to 6 months from starting to build your business credit profile. So from start to 6 months later, you're easily up to $20,000, $30,000, $40,000 limit accounts. And the reason for this is because your business has a greater appetite for money. It has a greater need for money than you do as an actual consumer, which is why limits are so much higher on business accounts. Another huge benefit of business credit is that you can get this very quickly. So even if you're just in a startup phase, You can get business credit immediately. You can get vendor credit accounts immediately. You can get store credit accounts in about 60 days. You can start to get Visa cards and MasterCards within only about 90 days. So it really gives you the ability to get money very, very quick. Of course, if you can qualify for a loan now, you can get a loan even faster. But in order to get a loan, you have to have cash flow credit or collateral. So business credit is one of the fastest ways to get financing, especially if you can't qualify for a loan. And another huge benefit is that there's no impact on your personal credit. There's no consumer credit reporting, so all this credit you're obtaining reports to the business credit reporting agencies, not the consumer. There's no inquiries on your personal credit report, which can get you turned down for loans and credit cards, and can even get you turned down when you try to solicit your credit card companies for increases to your credit limits. It all comes down to inquiries. So by not having inquiries on your credit report, it helps you separate your personal and business credit. And personal credit quality doesn't matter. So no matter how bad your personal credit may be, you could still get business credit. You can still get all the benefits of business credit because your consumer credit isn't even reviewed. It's not even polled or looked at when it comes down to actually qualifying for business credit accounts. So with business credit, you have no personal liability. This is why at Inc. and SBA and Score and Forbes and Fortune and Entrepreneur, this is why they all tell you it's so important that you separate your personal and business credit, because in doing so, you then separate your personal liability. You're not personally liable for what's happening in your business. You can get it as a startup. We all know it's very difficult to get financing for a startup business, and the reason it's difficult to get financing for a startup business is because the majority of startup businesses fail. But the majority of startup businesses fail because they can't get access to money. So it's kind of this catch-22 that a lot of entrepreneurs find themselves in. Well, business credit you can obtain and get these high limit accounts at stores and vendor account and auto financing and cash credit cards. You can get all of this even as a startup when you can't get a lot of loans. You can even get approved for business credit when you can't get a loan because there's no collateral requirements. There's no personal credit quality requirements. There's no cash flow requirements. So I call business credit the catch-all. It's a catch-all because you can get it even when you can't get a loan. To get a loan, you have to have one of these lendable strengths. If you're going to get money for your business, you need to have one of those three. Business credit's the only solution that exists for business owners where you can still get a lot of money, a lot of money and financing to grow your business without needing the cash flow credit or collateral that's required for you to actually come in and get a business loan. Now, business credit doubles your borrowing ability because you can actually create two credit profiles and scores. You've got your consumer credit and you've got your business credit. And a lot of people are still confused here. A lot of people still think this is fraud. A lot of people still think you can't do this. A lot of people still think that they confuse a CPN number with an EIN credit. The reality is there's a reason that Michael Dell and every other business owner or high-level CEO doesn't sign and personally guarantee the business debt. It's because their business accumulates enough corporate credit where the business can stand on its own. So again, not only is business credit very legal, but it's recommended by the top sources that are out there. We actually have a link on our site for this, creditsuite.com/legit, and at creditsuite.com/legit, you can see articles from SBA and Entrepreneur and Inc. and Score and all these other sources that talk about the importance of having business credit. Now, what you can't do is you can't legally put any number in the place of your social security number on an application that's not your actual social security number. If you try to do that, you're committing 2 felonies. But with business credit, you're leaving your social security number blank, forcing them to pull your business credit for approval. And we're going to talk about that because that's one of the big mistakes that people make. Having established business credit increases the value of your business because businesses that have large amounts of access to credit or high recommendations of credit are worth more than those that don't. And it also gives you a competitive advantage because the bottom line is if you've got 2 companies that sell exactly the same product, the company with the most money has the best chance of success. And corporate credit, business credit really gives you the best competitive advantage because it gives you access to that capital. And it also determines if you'll get a loan. how much of a loan you'll get, the rates and terms you'll pay. If you follow us on Facebook Live or Periscope, which you can access both at the top right of our website, creditsuite.com, you will see that we do live streams where we review people's business credit reports in real time. And the credit reports say, this is how much money I, Experian, recommends that you lend this person. So the credit reports specifically state right under the score how much money they recommend that you actually be lent. Okay, and we see a lot of people denied because they don't have established business credit. And this is a mistake that a lot of people make. In the consumer world, we're used to having to build a consumer credit report. But in the business world, if they even know you exist, so for example, Experian, if they just have your demographic information, they just know you and your business exist, they'll immediately establish a profile for you and immediately give you a very low score because you have no credit established. So by having no credit established, you could be denied financing and even credit cards just because the reporting agencies know you exist and give you a low score. But the opposite is also true. If you navigate past these 5 mistakes we're going to talk about today, you have success with building business credit, then your chances of getting a loan are much higher because you've got trade lines, you've got a good credit score or good credit scores with the reporting agencies. Okay, you can get approved for more money because the more credit you build, the more the reporting agencies recommend for you, and the rates and the terms you pay are substantially better for business credit than what you're actually going to find with it established than if you don't have it established. So let's talk now about the 5 mistakes. We've kind of given some background information here, right? We've talked about what you should know when it comes to what business credit is, why you should care, the benefits of what it actually provides you. Okay, but now let's talk a little bit more about the actual mistakes that you're going to make, the pitfalls you can fall into that can create a scenario where you're not successful establishing business credit because you're running into one or more different mistakes. So entrepreneurs report that over 90%, Entrepreneur Magazine actually reports that over 90% of business owners know nothing about business credit. Of the ones who do know, most don't understand the exact steps to get business credit or make common mistakes along the way. So today what we're going to do is outline these mistakes and get you tips to avoid them, because if you know the mistakes that other people are making, then you know what to avoid so you can have success. And this is one of the things that I think, and I will completely mess up this quote by Warren Buffett, but his quote goes something along the line of, look, everybody learns from mistakes, but they don't have to be your mistakes. You know, and that's what we're really going to talk about today, is how you can learn from other people's mistakes so you can have success instead of having to fail your way to actual success. So one of the first decisions you make as a business owner is also one of the most important ones. It really ties into one of the biggest mistakes that people make. It's the biggest mistake that entrepreneurs make, and it also happens to be one of the very first steps you take when you're setting up a business. Initially, as you set up your business, you're going to be asked to select your entity type. And if you've ever went to your Secretary of State to set up a new business, or even LegalZoom or anywhere else, you'll see it's a pretty simple question of what entity you're choosing. It's just as common as all the other questions that you're actually asked when you go to apply or set up a business. Now, here's the most common entity types you're going to see: a C corporation, an S corporation, a sole proprietorship, a partnership, or a limited liability company, or what is called an LLC. Now, some people randomly guess. They get to that question and they just say, I don't know, I've heard before that this entity is better than another, so I'll try this entity instead. Others maybe follow the advice of people that they actually know that have a business. Others ask their accountant for advice, making the decision based on tax savings or what's in their best interest tax-wise. But whoever you ask for advice with an entity selection, make sure that you choose this wisely, because if you choose the wrong entity type, not only can it have serious tax consequences for you and your business, but it also can have serious other consequences when it comes to business credit building as well. So choosing the wrong entity can cost you a lot of unnecessary money when it comes to taxes. Okay, you can also lose out on one of the biggest benefits of building your business credit at exactly the same time. So when choosing your entity, take into account 2 different things. tax liability savings, how much you're going to save or pay with one entity versus another, and the liability that each individual entity actually has. So for tax savings, your accountant can guide you best. I'm not an accountant, so you should talk to an accountant when it comes to the benefit of the tax savings aspect. Now, they'll often recommend an S corporation or an LLC. Unless you're a pretty well-established business, then they may recommend a C corporation or you convert to a C corporation. Now, for business credit building, you should really stay away from partnerships and sole proprietorships. Those are two entity types that you really want to make sure you avoid. Because with sole props and partnerships, you and the business are one and the same. You are the business. So since you and the business are the same with those entities, you'll always be liable for what happens in your business. This means that the business was to get sued, you're included in the lawsuit too. They come after your personal assets. They sue you personally. If you default on any credit for your business, you'll also be personally liable for that debt. So I'm going to show you, or we're going to talk a little bit more about how you build business credit without a personal guarantee. But if you're a sole proprietorship or a partnership where you're liable for what happens in the business anyway, well then you're always going to be susceptible to having your personal assets pursued if you ever default. So the key is that you stay away from sole proprietorship, stay away from partnerships, because not only will your accountant tell you you'll probably have a worse tax ramifications in doing this, but most importantly for business credit building, you and the business are the same. So if the business gets sued, you get sued. If you default on credit for the business, you get sued. So in order to separate that liability, you really want to stay away from sole proprietorships and partnerships. One of the most powerful benefits of building business credit is that separation of personal liability. So what it means is that if you build business credit without giving a personal guarantee, well then if you were ever to default, you can't personally be sued. They can't personally come after your assets and empty your bank account and go after your stocks and your bonds and your vehicles and your car. They can't do that because you didn't personally guarantee the credit. It's one of the biggest benefits of building business credit, and it's also one of the reasons that SBA and Entrepreneur and Inc. and SCORE and all these organizations recommend that you separate your personal and your corporate credit. Okay, it's also one of the main reasons that SBA recommends that you build business credit as well. Okay, but if you're a sole proprietorship or partnership, you and the business are the same. The business isn't separate from you. You and business are the same entity. So if your business gets sued, you get sued, and this means if you default on a business obligation, then you can personally be liable for that obligation as well. So limiting your personal liability is simple if you choose the right entity and avoid the other mistakes that we're going to talk about here. Make sure you avoid sole proprietorships and partnerships when you establish your business. And if you're already a sole proprietorship or partnership now, then go ahead and get it changed over. Your accountant can help you change it over from an LLC to a corporation. You can even do this directly with your Secretary of State. And choose a corporation or an LLC. Whether you choose a S corporation or a C corporation doesn't matter when it comes to liability. It does matter big time when it comes to how your taxes are calculated. And again, I'm not an accountant. An accountant can better help you with that. But what I will tell you is that with a C corporation, you're basically taxed twice. You're taxed as an individual, you're taxed as a business. With an S corporation, then you are basically carrying over the profits or loss to your taxes, so you only pay taxes once. C corporations are usually more appropriate for bigger companies. If you're just getting started, less than $1 million or $2 million a year in revenue and sales, you probably want to stick with an S corporation. Your accountant can best guide you on that, but what I will tell you is that you want to stick with an LLC or corporation. That's where you're separate from the business. You're an individual, the business is an entity, you two are separate, and it's also when it comes to business credit building how you can really separate that liability. Okay, so when you do that, again, your accountant can give you some further recommendations, but when you separate those liabilities, then you are separate from the business, and since you and the business are separate, your liability is separate as well. So that's really one of the first mistakes that people make when building business credit is they set up the wrong entity right out the gate. If you've done this, Don't worry. You can easily go to your accountant or Secretary of State and change your entity to an LLC or corporation to separate that liability. Now, one of the other common mistakes that people run into in building business credit, okay, is when you choose an LLC or corporation, you're typically choosing an accountant there that your accountant will recommend. And well, actually, let me get past that to this next. All lenders and creditors have a secret set of credit standards or criteria that you must meet to actually get approved for any kind of credit card or any kind of loan. Okay, and if you meet the criteria, well, you'll often be approved automatically by the credit issuer's computers. We've all seen this before, right? You go online to apply for a credit card, and when you do, you enter your information, and you're usually given an immediate approval or decision. If you are denied, they don't usually tell you you're denied. They usually tell you you're going to get something notifying you by mail within about 7 to 10 days. So if you don't meet the criteria, you're typically going to be pushed to a manual review, and usually that doesn't end well. We've all been there before where that little wheel turns, it says the application's processing, and then it says you'll be notified in 7 to 10 days. And normally that is not a good sign. Okay, usually that means that a denial is on its way, and we've all seen the immediate approval decision as well, which is really cool. And it happens automatically by these companies' computers because you meet the criteria. Now, I actually just experienced this last week. I took a very rare vacation with my family, and to get into Universal Studios and get fast passes, we talked about applying for this American Express card, which is they give you all these cool passes if you do so. Well, boom, right there, we got an immediate approval decision right on the computer because we met all the criteria that they actually have. So that's my goal for you, is to be able to come in and get these high limit corporate credit card accounts in your business name, okay, automatically by the computer issue or the credit issuer's computers, instead of ever needing to get manually underwritten. And in order to do this, you just have to know what these standards are. So in most cases, as we've talked about, a manual review because of not meeting credit issuer standards results in a denial. So before applying for business credit or even a business loan, you must ensure that you meet or exceed these credibility standards. In doing so, you'll typically get an automated approval for credit without any kind of manual underwriting review. So first, make sure that your business is set up with the basics that you'll need to get business credit before you even bother applying. So set up your business with your Secretary of State, as you know, as an LLC or a corporation. Get your free EIN number from irs.gov. You can easily type in free EIN number into Google and only go with a link that starts with irs.gov to make sure it is actually free. There's a lot of sources out there that will tell you that they're going to get a free DUNS or a free EIN. You go through their process only to find out that they then charge you. The only way to really get a free EIN number is to go right to irs.gov to do so. The next thing is your EIN number. If you don't know, that's the number your business credit's built under. So you must have this set up before you even think of applying for credit. The good news is that that's the basics you need to do. Set up your entity, get your EIN, then you have the basics of what you need to start coming in and establishing business credit. And excuse me for 1 second, I'm going to take a water. I think I just had something go down the wrong hole, but I'm okay now. So you've got to get that entity set up, preferably an LLC or corporation. And next, you need to come in and get that EIN set up with Secretary or with your irs.gov. Now, all lenders and credit issuers have restricted industry lists that you should know about. If you choose an industry with a high-risk SIC or with your name indicating that you're a high-risk industry, you can be denied. So stay away from names that indicate you're in a high-risk or restricted industry. Guys, this has a lot of implications. Okay, merchant accounts, bank accounts, approval for loans, approval for credit cards. A lot of it's based on the SIC that you have and not being in a restricted industry SIC. So it's important that you stay away from high-risk industries. Okay, these kind of industries here will get you an immediate decline. Everything from ammunition to bail bonds to check cashing services to energy and finance to gaming to pawn shops to political campaigns, X-rated products, public administration, All these can get you an immediate decline just because you're even in one of these type of industries. Okay, but beyond all that, these will give you more stringent underwriting guidelines. So agricultural and auto, recreational boat sales and courier services, even gas stations and general contractors, hotels, motels, jewelry, limousine services, real estate agents, brokers, developers, restaurant owners, software, taxi cabs, all of these can give you more stringent underwriting guidelines. Now, I'm not telling you to avoid one of these industries. What I'm telling you is it's important that you know that the other ones I just showed you can get you an immediate decline. These can give you more stringent underwriting requirements. So an easy way to get past this is to just make sure that your name, your business name, doesn't clearly indicate that you're in one of these higher risk industries if you are. I mean, don't have a name that says real estate in it or one of these type of things. Now, maybe that's in your best interest or maybe not. You have to make that determination. But know that by having these things in your name, you absolutely will face more scrutiny when it comes to getting approved for a credit card or loan. Does that mean that you won't get an automatic approval? Not necessarily. But it does mean that you're going to sometimes throw up a red flag with some credit issuers and lenders, making it more difficult for you to actually come in and get approved. Okay, now never put a UPS or a PO box address on a business credit application. Something else you need to know to get that automatic approval and stay away from red flags that trigger the equivalent of an audit or a manual review that you want to avoid. You need to have a real physical address, not a UPS address, not a PO box address. So use a real physical address, one that's unique to you. Okay, your DUNS number from Dun & Bradstreet's assigned to your business based on your address. So when it comes to business credit building, your address is much more important than you think it is. As I mentioned, when we do live Periscope and Facebook sessions, we pull people's business credit reports, and so many people are stunned because all we need to pull a company's business report is their business name. That's it. But if there's other companies across the countries and other credit reports established for businesses with similar names, then that's when the address becomes important. By just typing in a business name in the city and state, you can pull a business credit report, even if there's a lot of companies with the same name around the country. So that address is very important because, again, the address you set up is what your credit profile is linked to with the reporting agencies, and you've got to make sure that you stay away from UPS or PO boxes. So don't use shared addresses with other companies, and make sure that you stay away from PO boxes and UPS addresses as well. Okay, now if you don't have a physical address, we'll use a virtual address instead. With a virtual address, you basically rent a physical address. You can get your mail there, and they forward it to you directly, and you get the benefits of a real physical address, but without the cost. So look, virtual addresses have a lot of different benefits. First of all, you're renting a real physical address without paying rent. Basically, you're just getting mail there. So I can pay $200 a month to have a building or an address in the middle of downtown Tampa, Florida. It makes me look very credible, and in reality, when my credit issuers send my approvals and credit cards there, all they do is take my mail and forward it to my home address. This gives you the persona of credibility without the cost of actually maintaining a big office, for example. And creditsuite.com/virtual, if that link isn't up yet, it will be. That will give you a link to our preferred sources for virtual addresses, one that will give you everything that you need for business credit building. Now, if you can't afford a virtual address, well, then use a home address as last resort. Lenders and credit issuers will know you're using a home address when you put it on the application, and some will not approve you for this reason. So try to use a real business address first, a virtual address if you don't have a real physical address, and as last resort, use a home address, but do not use a UPS address and do not use a PO box. Okay, don't use a home or mobile phone number as your business phone number on an application either. Lender and credit issuers will know if you do. And use a real physical business phone number or a voice over IP number. You can get it at places like Ring Central for cheap, usually less than $15 a month. You're able to come in and be able to get or to get a business phone number or a voice over IP number. RingCentral's who we used for a long time, and we really recommend them. Now make sure you also get a business fax number, and make sure you get a toll-free number for the business. Most places that offer voice over IP numbers, you can get both even as part of your phone number. So for example, with us, our phone number is 877-600-2487. It's toll-free, and it's our fax number as well. So it doesn't hurt us at all that our phone number is our fax number. It's even preferred in a lot of places nowadays. So one cost of $10-15 a month, you get a toll-free number and a fax number all in one. And you've got to make sure that that phone number is listed with 411. This is so important to one of the biggest mistakes people make when building business credit. When you build business credit, you're going to start with what are called vendor accounts. Those vendor accounts will only look for a couple things to make sure that you can get approved. You got to have an entity, you got to have an EIN, you have to have your number listed with 411. I always thought you could go to 411.com and do this, but believe it or not, you can't do that. That's why lenders and credit issuers rely on it so much, because you can't fake a 411 listing. So you've got to go to places, and there's a lot of places out there that will give you or help you with the 411 number, including companies like List Yourself. So set up a professional website for your business. You can go to a place like GoDaddy.com and get a domain for 10 or 12 bucks, and make sure that you get a professional email with it as well. So if I go to GoDaddy right now and pay 12 bucks, I can get any domain, not any domain, but I can get the domain that I want to get. And on top of that, I also get an email that goes with it. So for example, my email is info@creditsuite.com. My domain is creditsuite.com. So you get an email that goes along with your domain, and that's much more professional than using Yahoo and all those other type of things. So then you can go to a place like templatemonster.com, get a pretty professional website template, and have it put up for very cheap, usually less than $100, about $50 to $75 you can get this done. And you can even go to places like Fiverr.com or Upwork.com, and they will actually help. You can hire contractors to put your website up for you. So for less than $200 a month, you can get your domain and emails that go with it. You could get a professional looking website template. You could get your website live, and also have people put all the content and everything up for you for less than $200. Now again, you can spend $5,000, $10,000, $25,000 for a nice website, but there's a cheaper way to do it. It doesn't matter which way you go, just make sure that you have a professional website. Never leave that field blank on an application. And also don't forget that the email addresses come with it, so don't go with an AOL or a Yahoo or any of those email addresses on a business credit or loan application. Make sure you always choose a professional domain email address. Like I said, as an example, info@creditsuite.com is ours. So Google your business to see what listings show for your company. It's another great idea and one of the biggest reasons people get denied business loans. This still blows me away. Okay, but our COO was one of the biggest business bankers in Wells Fargo, and this was something she revealed to me that I had no idea of. That one of the most common reasons people even get denied for business loans is they apply with the bank through one name. The bank runs that name on a listing and can't find the company name that's exactly the same on the application as what's online. So you've got to make sure that your business listings online are the same as what shows on your application. You got to make sure that all the listing information is congruent. Your business name, your business address, your business phone number. This can get very problematic if you change addresses. We were in business for years, and then we just moved to this new facility that we moved into a year ago. The problem is everywhere you looked online, our business address was something different. So we used a service like Yext, which is who we use. We spent $500 a year, and they make sure that all of our listings are congruent online. Now, if you're a startup, if you're not listed everywhere online, you definitely don't need a service like Yext, okay? But if you already have a bunch of misinformation online, different addresses, different phone numbers, different business names, instead of going through each one and correcting them one by one, it might make sense for you to invest in a service like Yext, where in one shot, you get it all done instead of paying as you actually go through each listing to make sure that you get it updated correctly. So one of the biggest mistakes entrepreneurs make when getting business credit is thinking that they're getting true business credit when they're not. And so far, to kind of backtrack, we've talked about two of the most common mistakes, right? So that first one really has to do with setting up the right entity right from the beginning, making sure you choose the LLC, making sure you choose a corporation, one or the other, so you and the business are separate. It helps limit your liability when it comes to getting sued, if that ever happens, and it helps eliminate or limit your liability when it comes to building corporate credit, because again, you and the business are separate, so it also gives you the ability to separate your credit profiles. The next biggest mistake is people rush right into building business credit. They think just because they have an EIN number that they can start getting all this credit for their business just because they have a business. But you can't skip this number 4 mistake step that we see. You got to make sure that that business is set up credibly. Everything you put on that loan application or credit application should reflect you have a legitimate, credible business, that you have a real location, that you have a real business phone number, that you have a business website and a professional email address and a fax number, and that all your listings online are congruent so you're easy to find when you go out there, that you've got a toll-free number. These are the little secret things that lenders and credit issuers will not tell you that their computer is looking for when you fill out that application. And I highly suggest this to you. It drives my wife absolutely flipping nuts, because whenever I fill out any kind of application for anything, I scrutinize every single field on the application. I try to figure out why they're asking me that question and what they're going to look for into that question. I absolutely overanalyze it because I know how the banking and credit issuing industries work, and they work because every line item they're asking you for, it has some kind of validation they're doing on the back end to make sure they're going to give you a yay or a nay. And if you get too many red flags and too many nays, then the problem is you get denied. And if you have a bunch of yays and not very many nays, then you get an automatic approval, which is, again, my goal for you. So now let's move forward to the third biggest mistake that I see people make when it comes to building business credit. And one of the biggest mistakes that we see when people are getting business credit is that they think they're getting business credit when they're actually not. And this is because many credit issuers offer credit for a business, but this credit asks for business details on the application and also has the business name on the card. It looks legitimate. You go to apply for a business credit card. It asks you your EIN number, your revenues, etc., etc. You get approved. The credit card comes with your name and your business name on it. And a lot of people we talk to say, I already have established business credit. Look, here's my debit card. Here's my credit card. It's got my name on it, and it's got my business name on it as well. But some of this credit comes in the form of debit cards, and some of it actually comes from credit as well. Okay, it comes from actual revolving credit card issuers. Some come from your bank, some come from other sources, for example, like Capital One. But in either case, whether it's a debit card, whether it's a credit card, whether it's from your bank or a credit issuer, business details are required for approval, and the cards are issued with your business details on them. So it gives you the persona, the perception that this is real business credit. But most of the cases, this is not truly real business credit or real corporate credit. Anytime you ever supply a social security number and personal guarantee, you are not getting real business credit. So don't think that just because they're asking you business questions and you're getting a card with your business name that you truly have business credit. If you supplied your social, then you absolutely are also supplying a personal guarantee as well. You're only getting credit that's issued to your business and you as an individual, not the two of them separate. So if you default, you're still going to be personally liable for this credit, even though it has your business name information on it. And it's kind of similar to a cosigner experience, right? Because what happens is both you and the cosigner are liable. If you ever default, then both of you can go down. Well, that's the same thing with this kind of credit. If you're getting credit that you're giving a social and that you're personally guaranteeing, well, then you're getting credit that's issued to the business and you as an individual both. So you're still personally liable and you still really have not separated your credit profile. So if your consumer credit's bad in this case, you're not going to get approved. And the rule of thumb is pretty simple here. If you supply your social security number on an application for credit, they are going to pull your personal credit. Even if you are applying for a credit card or loan for your business, okay, even if you have well-established business credit, no matter what scenario, if you supply your social on that application for credit, then they are going to pull your personal credit and make the approval decision based on that, and you're also going to be personally liable. Remember what I already told you. It is not illegal to leave the social security number field blank. You have every right to do this. There's only a few legal cases where you have to supply a social. For example, when you get your driver's license, when you file taxes. There are some examples. I think motor vehicle registrations. There are about a handful of cases in this country where you have to provide your social. But credit and loans are not one of them. You can absolutely get credit and loans for your business without supplying a personal social security number. There's no law that requires that you provide a personal social security number on an application for credit. But remember, there are 2 federal laws that say you cannot enter anything in the social security number field other than your actual social. So you can't use CPN numbers and all this other bogus junk to put something else in your SSN field. You're committing 2 felonies. But you can leave the social security number field blank, and when you do that, then that's the only way you're really getting credit without the personal guarantee, without the personal liability. So true business credit doesn't require a social security number be completed on the application for approval. Once you supply that social, you are attaching a personal guarantee, and the business issuer is going to pull your consumer credit and make the approval decision based on that consumer credit quality. In a lot of cases, the credit you obtain, it even reports to the consumer credit reporting agencies. So this could be devastating to you because 30% of your FICO consumer credit score is made up of what is called utilization, which means the more money you put on that card as a balance, the lower your scores will be. As a matter of fact, when you listen to the foremost consumer credit scoring experts in this country, they will tell you that it makes sense to leave your credit card balances below 2% of your limits to maximize your FICO score, and anything over 30% balances compared to your limits can lower and hurt your scores almost as much as making your payments late. This is why business credit limits are so high. Remember, businesses have a greater appetite or need for available credit than consumers do. The problem is if you get one of these cards that you provided a social and now it reports to the consumer credit reporting agencies, as you use that credit for your business, which is what you got it for, then as you start to use that card more and more, your consumer scores go lower and lower and lower and lower. Okay, which is a huge problem because 30% of that score has to do with utilization. So just by using that new credit card you get for your business, you're going to dramatically lower your consumer credit scores. I've seen people lower their scores 120 points because of a $200 increase to the balance that they owed on a credit card. Because their limits were so small, that $200 messed up their utilization ratio so bad that it crushed their credit score by over 120 points and cost them the home loan that they were looking for. So it's a really big deal, and this is why you've got to stay away from this kind of credit that looks like real business credit but truly isn't, because you're providing a social to actually come in and get approved for it. The Capital One Spark Card, perfect example of this. Okay, with the Capital One Spark Card, the application you complete looks and feels just like a business application. It asks you for your business revenue, how long you've been in business. It asks you for your business EIN number. You supply all the same information you would for what you believe to be a real corporate credit card. But if you get approved, the card reports right on your consumer credit reports. They require a social for approval. They pull your personal credit report and put an inquiry on your personal credit report. Okay, then it reports to your personal credit reports, which harms you even more. And then your scores could just absolutely plummet and you can get denied because this actually happens. Hand raised, this has absolutely happened to me personally in my life. That's how I know of the Capital One Spark Card before I learned what I know about business credit. Applied for one, thought it was in my business name, went on my credit report, and of course we would rack up a big bill on it every month in the business and pay it off at the end of every month. And then I went in to get an actual vehicle and got denied with the bank because my ratio was so high, and it was a business account. It wasn't even a consumer credit card account. So this absolutely has happened to me and absolutely will happen to you. You've got to stay away from these type of cards like the Capital One Spark card that are based on personal credit quality and report on personal credit. So do you have true business credit? Well, only if you obtain the credit without supplying the social. If you did supply it, you might have gotten a business credit card, but it's not true business credit. This means you won't get hardly any of the benefit true business credit provides. You're still personally liable. There was still a personal credit check. The limits are still low on it because it's not a real business credit card. There's an inquiry on your personal credit report, which adversely affects 10% of your score. So 10% of your score is adversely affected by the inquiry. 30% of your consumer credit score is adversely affected by utilization. So 40% overall of your credit score is harmed by getting this kind of credit in what you think is your business name, but credit that's really issued to you as a consumer as well as your business. So a mistake you have to avoid. Now, somewhere along that same line really comes into mistake number 2, which is we're conditioned to believe that there's a Social Security field on an application that you actually have to complete it. But again, as I mentioned, there's no law that requires that. There's no law at all that requires that you even fill out that Social Security number field. Now, as I mentioned, there are 2 federal laws that make it a felony to use any other number instead of a Social Security number. And this is why you'd never want to mess with CPN numbers. You never want to buy CPN. You never want to be convinced that you're going to get a CPN number to overcome your horrible personal credit. Because what you're typically buying is you're typically buying a Social Security number that belongs to somebody else, somebody that's deceased or sometimes even a baby. And the problem with that is then it becomes identity theft as well. So now you've actually got multiple felonies on your hand beyond just the 2 that are felonies for filling out the Social Security number or for fraudulating a Social Security number field. Now you're actually committing identity theft as well. So you can legally leave that field blank. So now in step 3 or in mistake 3, we really talked about staying away from these cards that aren't real business credit accounts that tell you you've got to have your social to apply. If that's the case, you want to stay away from that credit. That's not even real business or corporate credit to begin with. Now in mistake number 2, we talk about how to do that. Leave the Social Security number field blank. Okay, we see these kind of comments on our Facebook page all the time where people just do not understand this concept. They think that by leaving the social field blank, you are committing some kind of crime and that it's illegal, but it's absolutely not the case whatsoever. If you leave a Social Security number field blank on an application, what you're doing is forcing the credit issuer to then pull your EIN credit report instead. Now, let me stop here. First of all, whether you know it or not, they're doing this. They're pulling both. So if you gave them your social, they're pulling your consumer credit, and they're also pulling your business credit. Now, a lot of people don't know this because there's no Fair Credit Reporting Act in the business world. The Fair Credit Reporting Act says if you apply for credit and you get denied, the credit issuer has to tell you in writing why you got denied and which bureau they pulled. But there's no law like this in the business world. So they're pulling your business credit report every time you apply for a business credit card or business loan. That's tying into the decision of whether or not you're going to get approved, the rates and terms you'll pay, how much you'll get approved for, but they'll never tell you that they're pulling this business credit report. So they're going to pull it whether you give them the social or not. But if you don't give them the social, that's the only report that they pull. So now they're making the lending decision based on the quality of that corporate credit profile, not the quality of your consumer credit profile. So your approval decision is based on the quality of what's on your business credit reports, not your consumer credit reports. And this is what we want because we don't want your personal credit to affect your ability to get business credit. The only way we can do that, the only way we can really create the separation between business and consumer credit is to leave that Social Security number field blank. Now, don't forget, when you supply that social on the application, you're also authorizing them for that consumer credit pull. This means the approval decision, as I said, is based on the quality of that consumer credit, and you put that inquiry on your consumer credit report, and you have that personal guarantee. Okay, so you can leave the social field blank, and with some established business credit, you're still going to get approved. And you can get approved for many types of credit that we've already talked about this way: vendor credit, store credit, cash credit, fleet credit, auto financing. Why am I showing you this again? Because some people listen to this kind of training and then think they can go get a loan and leave the social security number field blank. That ain't going to happen. You can get a loan with leaving your social security number blank, some cases, rare cases, but it would take really, really, really well-established business credit to ever get to that point. For about 100% of you listening to this right now, I will tell you that doesn't apply. When it comes to getting a business loan, you're probably going to attach a personal guarantee and have to give them your social if you want to get approved. Remember, there's no law that says you have to give somebody your social. You don't have to, but you're probably going to get denied for most business loans if you don't. But you can still come in with business credit and get vendor credit, store credit accounts, cash credit accounts, fleet credit, auto financing without the personal credit check, without the social being supplied on the application. Now, don't get me wrong. If it comes to getting a loan and your business credit's really good and established and your consumer credit's bad, your established business credit can help you overcome the bad consumer credit and still get approved. But most business loans, you're going to need a social. This type of credit, you don't need to supply a social security number on the application and you'll still be able to get approved. Even though you can get revolving business credit without providing your social, most business loans are still going to require it, but almost all business credit lines and loans will require your social and require a consumer credit pull. So I get this question a lot. People from other countries like Canada say, can I build business credit if I live in Canada and I don't have a U.S. social? You absolutely can. You can get a company established here in the business in the U.S. using an EIN or a TIN number. Okay, and with that established company, you can still get business credit without a personal social. But most of the time, you can't get a loan if you're outside of the United States within the United States because most loans require the social. And if you're not a resident here, you don't have a social. So this is why business credit, again, provides so many different benefits, because even as somebody that's not even a resident or has a social in the United States, you can still secure business credit when you're not able to come in and get approved for most loans. So it's possible to build your business credit so strong you can avoid those loans without the personal credit check. But again, you're going to need to be in business a long time and have a lot of money in revenue, sometimes in the millions, to ever accomplish that. And you'll have to have very well established business credit to ever get to that. So I'm not telling you that you can't get loans and credit lines without a social being supplied. After all, companies like Dell do it, right? I mean, all of the biggest privately and publicly owned companies are getting loans without their owners and CEOs providing the social. But if you look at these companies' credit reports, in a lot of cases, they have hundreds of trade lines. They have credit limits that are millions of dollars on the credit they've obtained. They've got revenues of the tens or hundreds of million range. And when you get to that point, it's possible to get loans without the guarantee. But if you're not really well established with millions in revenue and multiple years in business, you're not going to accomplish this. You're still going to need the guarantee and social on loan applications, but you don't need it on any of those credit applications or even auto vehicle financing, as we just talked about. So now we've talked about 4 of the 5, right? Now you know to get an LLC or a corporation set up, to set up your business credibly. You know to avoid accounts that look like they're business credit accounts but force you to give them a social. And you also know to leave the social security number off the application, or if you don't, they're going to pull your consumer credit. In a lot of cases, you could even get credit that reports to the consumer credit reporting agencies. So now I want to talk about the number 1, the biggest mistake that we see people make when building business credit. You can apply and get credit for your EIN that's not linked to your social. That's what business credit really is about. To do this, you apply, leave the social security number field blank. We've already discussed this. You know how to get that done. And I got something overlapping this, but we'll still figure it out. But you cannot start applying for most credit with stores and with direct credit issuers and banks unless you have some credit reporting on your business credit reports now. You have to do that and have some established credit before you're going to get approved. There's a specific sequence you must apply for business credit in order to get approved. If you apply for credit in the wrong order, well, then you're going to get denied. And this is number one for a reason. This is the biggest mistake I see people make. They listen to my training, they go in their bank and try to get a Visa card with no social and get denied, and then they email and go, man, I don't know what happened. Well, what happened is that you went into your bank with no credit established trying to get a credit card from them. Your bank isn't the place to start. You have to go through the sequence or tiers of credit the right way to get approved. The correct order or tiers of credit is this order. Vendor credit first, store credit next, fleet credit next, cash credit and vehicle financing last. If you skip a step, you get denied. So we had a client that did this the other day. He came in, he lied to our advisors and said he had like 7 established credit accounts when he really only had 1. Our advisor said, if you have 7 accounts reporting now, go to this tier and apply. He went to the tier, applied, and got denied for all of them because he only had 1 account reporting. He, like a lot of people, want to try to shortcut this process, want to move forward and start getting all the good cash credit, fleet credit, and store credit with no base to build on. But you have to have a strong foundation to build your credit off of, or you won't be able to get the better credit. You can't just, you've got to have a strong foundation to build a house on, or you're going to have something that's obviously not going to be very sturdy and not even really be able to be built successfully. So this is the proper tiers or order of credit you have to apply for to successfully get approved. Vendor credit first, store credit next, fleet credit, and then you get to cash credit and vehicle financing. Now you should start building business credit using vendor accounts. Now this is often called trade credit, and the credit issuers will issue terms similar to net 30 instead of revolving, which net 30 means you have about 30 days to pay them back. I have a great webinar that we did on our YouTube channel. You can go to youtube.com/credit suite, and we dissect this. We talk all about trade vendors, what they are, who they are, how they work. It's worth checking out if you don't know much about them. So you've got to start with trade credit. Now, over 90% of these trade vendors who issue credit don't report it to the business credit reporting agencies. That's the issue. I talk to people all the time that fall into this. A buddy of mine called me months back and said, man, you're never going to believe what's going to happen to me. I just went to get my credit card raised. I had a $50,000 limit credit card, went to get it raised. They just lowered it to like $5,000 and said because my business credit isn't established enough. What does this mean? I buy millions of dollars worth of advertising every single month from all these places, but the problem is none of the credit he thought he was getting reported to the business reporting agencies, because over 97% of trade vendors that issue you credit don't report to the business credit reporting agencies. We're not used to this, you and I. We're used to, if you go in and get credit somewhere, we know it reports on our credit reports. But in the business world, that's actually not the case. 97% of trade vendors don't report the credit to the business credit reporting agencies. So you've got to make sure that you're working with vendor and trade credit sources who actually do report to the reporting agencies. Now, some of them, now marking out Seton. Seton no longer is a good source here. They stopped reporting. And again, if you go back, you'll see in my training this happens all the time. A lot of companies come and they go and they report and they don't report. So Uline and Quill is one. Monopolize Your Marketplace is another. And in place of Seton here, let me also tell you Granger is another. So Granger, Uline, Quill, Monopolize Your Marketplace, and literally Seton just today we finalized verifying that they're no longer reporting at this moment. They might report in the future. So you've got to get these kind of vendors, and they're two things that are very unique. One, they will give you credit for your business even when you have none established now. And second, they report to the business credit reporting agencies, which is what makes them worth their weight in gold. Now you got to have 5 of those type of accounts reporting to start getting approved for store credit. You'll need 10 accounts reporting to get approved for fleet credit, and then you'll need about 10 to 15 accounts to get auto vehicle financing. So remember, we talked about getting vendor credit first. Then with 5 of those accounts, then you move to that second tier of store credit. Then you move to that third tier of fleet credit. And then you move to the last tier of cash credit. And it's all based on how many accounts you have reporting. Now keep in mind, all store credit will not approve you with 5 accounts reporting. Some stores will not issue you credit until you have 6 or 7 or 8 accounts reporting, but you can start to get store credit at a lot of different retailers with even 5 accounts reporting. You have to do this in sequence or you will get denied. So make sure you apply for credit in the right order to avoid getting denied and to make sure you can get approved. You can get credit for your EIN that's not linked to your social and all the benefits that go with it. But to do this, you've got to avoid these 5 mistakes. You've got to choose an entity, a type of corporation or LLC. You've got to make sure you set up that business credibly. You've got to recognize true business credit. It doesn't require a social. There's no personal guarantee attached. There's no consumer credit inquiry on there. There's no consumer credit reporting as well. And you've got to leave the Social Security number field blank off the application. If you don't do this, then you can easily be denied, and you've got to apply for credit in the right order. Okay, look, guys, you can't walk into Staples with no consumer credit reporting and get approved for a Staples consumer credit card. They're going to require you have credit reporting before they'll even give you a consumer credit report. The same thing with the business. You can't walk into Staples with no business credit reporting and ask to get a business credit card. Okay, you can't walk into your bank with no consumer credit established and expect them to give you a credit card. They're going to want you to start with secure credit cards and other things to build a credit report and score first. Same thing in the business world. You can't go in to get an auto vehicle or to go in to get a cash credit card at your bank without having established business credit first. Okay, just because you have a business does not mean you have established credit. And it's the establishment of the credit that helps you get more and more and more credit as you go. You start to get vendor credit accounts. You get 5. Then stores start to approve you for $10,000, $20,000, $30,000 limit accounts. Then you get another 5 of them. Then you start to get fleet credit cards with, high limits of $20,000, $30,000, $40,000. And with 10, 15 accounts reporting, you can even get Visa cards and MasterCards and start to get Amex cards and even get auto vehicle financing without the personal guarantee and without the personal credit check. But it's only possible if you avoid these 5 mistakes. You've got to do so. Set up the LLC or corporation to separate the liability. Make sure that you set up the business credibly. Make sure that you don't go apply for fake business credit, that they won't give it to you without the social, and maybe even report it to the consumer credit reporting agencies. Make sure you leave the social off the application so there's no consumer credit pull and no personal liability, and make sure that you apply for credit in the right order. Vendor credit account first, store credit next, fleet credit next, cash credit, auto vehicle financing last. If you do that and avoid those 5 steps, that's really the key to being successful with building business credit and avoiding those failures. So do you have questions? Well, let us know. 877-600-2487, info@creditsuite.com. And don't forget the free guide that I've mentioned throughout, creditsuite.com/EIN. Guys, look, we often see that it takes about 3 to 5 years, depending on the person we're talking to build business credit on their own because they run into these pitfalls and a lot of others and get frustrated and quit. So if you're interested, we've got a lot of free training that you can go to our website, creditsuite.com, top right of the page, access our YouTube channel, our Facebook, all these places we do live streams, and get our free training. If you're really interested in expediting the process and converting years of business credit building into months, well, then get with us. We can talk to you more about that too and how we can help you expedite your business credit building process for less money than you'd even spend building business credit on your own, because there's so many things that we give you as part of our process that you don't have to pay for, that you're going to have to pay for if you do this on your own. So if you're interested in talking to us more, let us know, 877-600-2487, or send us an email, info@creditsuite.com. Whether you work with us or build business credit on your own, make sure you avoid these 5 common mistakes, and that'll help you overcome 5 of the biggest pitfalls that we see people run into with building business credit so you can successfully get credit for your EIN that's not linked to your Social Security number. Feel free to get in touch. We'd love to talk with you more. We'd love to help you expedite your business credit building process. 877-600-2487, info@creditsuite.com. Thanks, everybody. If you're watching this on YouTube, then make sure you like and subscribe our channel, and you'll get updates when we roll out more content. And Again, if you go to creditsuite.com/EIN, you get on our email list where you can get in on our live sessions and be the first to see them as they actually go live. And if you like to listen to this kind of content, but you're not always in front of a computer, well, then go check out creditsuite.com, top right of our page, and subscribe to our podcast. And you'll actually be able to listen to a lot of cool information on our podcast that we release every single week. Thanks, everybody, very much for taking the time to attend today. I hope you have a great day. Thanks, everybody.